Well, the Fed is no longer worried about inflation. We've got numbers this week that indicate that the Fed is no longer worried about inflation. They're worried about deflation coming on too quickly, which indicates an oncoming recession, to the point that they are starting to leak information to WikiLeaks, which tells the Wall Street Journal what the Federal Reserve is thinking. They've been leaking to WikiLeaks that they're considering a 0.5 interest rate reduction instead of the standard 0.25 reduction. And it's going to continue for a while. We should end the year at least 0.75 of a point below where we are as far as interest rates go. Interest rates have already been lowered, the long-term interest rates. Mortgage rates have come down they were flirting with 8%, and now they're in the 6% somewhere. The consumer price index, the CPI, the core CPI came in at 3.2%. And the headline CPI, it came in at 2.5%. This is a massive improvement. The headline CPI the previous month was 2.9%. They've got inflation coming down, and they know it. And the PPI, the Producers Price Index, was even more emphatic. The PPI, the Producers Price Index, predicts future CPIs because the producers pass the price increases on to the consumers. The core PPI was only 2.4%, and the headline PPI, get this, was 1.7%, below the 2% target of the Federal Reserve. We've got inflation coming down. We've got interest rates coming down. This has all changed so emphatically with the debate, the presidential debate. And I think politics are now taking control of the market to some degree. On Tuesday, both candidates in the debate are falling over each other, talking about tax decreases. Trump, for his part, talks about no taxes on Medicare, a possibility, talks about not taxing tips, which is a possibility. And how would he pay for these things? It would be with tariffs. Now, the main thing Trump says with the tariffs that is in error is that the foreign countries pay for this. Foreign countries pay zero on tariffs. Who pays the tariffs are the United States companies that buy the products from China. That is where the tariff is paid. And then they pass that increased cost on the consumer. So it is a tax on the consumer. And he's talking about massive tariff increases. And what's really interesting is at the end of September, Joe Biden is going to increase tariffs anyway. He's going to increase the tariff on electric cars by 100% on China. Now, Biden wants to do more targeted tariffs, like on electric cars and on some solar components and on some face masks and things like that, but it's more targeted, whereas Trump is talking about more extensive tariffs that would be like a 40 to 60% increase on everything. And I don't know if it's just on China or if it's going to be on everybody or how much it's going to be on Europe versus China. These things have to be worked out. But the intention of Trump is to be much more extensive with the tariffs, which is a tax on the American consumer. The foreign countries pay nothing. It's the American companies who pay the tariffs, who pass the cost on to the American consumer. Kamala, for her part, is talking about increased child tax credits, It's interesting, a $6,000 child tax credit for a newborn baby and increased child tax credits for older children. It's less than the 6,000, but it's a significant increase from there being no tax credits for children, which were phased out after the pandemic ended. The most bullish thing Kamala is planning is a $50,000 tax deduction for small business owners. Of all the tax cuts I've heard so far, I think that would be the most stimulative, would help the people that really need it. The big corporations are doing fine, and they've got to increase the corporate tax somewhat, probably to like 28%, maybe to 24%. It's 21% right now, but they got to increase it somewhere. Somebody somewhere has to pay the price. Okay, it's not a free lunch everywhere, but the net effect of all this, whoever gets into office, there's going to be tax cuts, or at least there will be no tax increases, which is good news. The only people that would worry about tax increases is if you make over $400,000 a year, your taxes will probably be higher if it's a Democratic sweep and they can get it through both chambers of Congress. If you make over $400,000 a year, or if you're worth over $100 million, and there's less than 10,000 people in the country that are worth over $100 million. So it's a very select portion of the population, but I think it's more realistic. The money's got to come from somewhere, and it's not going to hurt the general economy. These people have benefited strongly from the tax cuts. And if you're making less than 400,000 and you're worth less than 100 million, this will affect you if you become worth more than 100 million or you make over 400,000 a year. And if you're in that category, you're in less than 1% of the people I'm talking to right now. Looking at the 1 month chart on the NASDAQ and the S&P 500, and in the first week of September, $2.2 trillion were lost in the markets in the first week of September. In the second week in September, the NASDAQ went up about 6%, which was the best it had done since about November of 2022. So we have the worst of times and the best of times for a very unpredictable September. But I think we're on course now for it to be bullish. During the first week of September, I was very bearish, and I was making money with the SQQQ because the VIX was above 20. I'm getting so I will not short the general market like that unless the VIX is over 20. Which indicates that there's more puts than calls being bought. And then in the last week, particularly since after the debate, the market took off. And I think it took off because of all the tax cuts the candidates were providing. Plus, I think it was a refreshing atmosphere to have some optimism and hope injected into the debate. So I think the stock market is partly emotional. I want to say it's the majority of it is emotional, and that's why it's so important to control your emotions, to know when things are just getting out of hand or whether it makes some logical sense too. Hopefully the emotions go with the logic, but frequently the emotions overwhelm the logic because we're more subconsciously than consciously driven. I bought some Nvidia, and it's mostly just consolidating. I bought it at about 117, and I plan to try to hold on to it if the market will cooperate. I've seldom seen markets vacillate this much, but I want to hold it. It's like $33,000 worth of it. At the beginning of this year, I owned about $800,000 of Nvidia when it was rocking and rolling. So it really is just a position I think I should have, just because its long-term outlook is so positive. And its relative strength is 53, which is okay. I bought Dell Technologies, which is a computer maker, which is on the hardware side of artificial intelligence. Looking at the chart of the year-to-date chart on Dell, DELL, you can see that it hit 175 at one point. So it's come down quite a bit, but it's going to be added to the S&P 500 on September 23rd. And it's been my experience when they are added to the S&P 500 that they almost invariably go up. So I'm doing this partly as a swing trade and partly because I like the stats on the stock. Its relative strength is 56, which is okay. Dell is trading around about 114. I bought it at about 106, and its value is about 152. So there's a lot of value in this stock. Its price to earnings is only about 14, which is outrageously low for a technology stock. And its earnings growth rate is 19, which is very good. But the main thing is it's being added to the S&P 500 on September 23rd, and all the index funds are forced to buy it. I also bought Palantir, symbol PLTR, because of its recent upswing in price, and also it's going to join the S&P 500 on September 23rd. You know, I've followed the stock since its IPO a couple years ago, and it went up to 40-something back then, and then it went down to like $8, and now it's come back up to 35. But I'm playing this mainly as an addition to the S&P 500 because the statistics on it are not good. They had problems early on because the employees were paid with stock, and your stock was constantly being diluted, and it probably is still happening, but now it's big enough that the dilution by employees is probably less of a factor. They do a lot of work for the CIA and the FBI and the military. It's rumored that they helped find bin Laden. The basic thing with Palantir is they say you can tell the future with Palantir. If you give it any large set of data, they will find the answers in that data if it can be found at all. So they are some original artificial intelligence. And it's interesting that both companies, Dell and Palantir, that are being added to the S&P 500 on September 23rd are basically artificial intelligence companies. Dell is on the hardware side and Palantir is on the software side. But Palantir has awful statistics. Palantir is trading at around $35. Its value is less than $8. Okay, so it's very much overvalued. Its price to earnings is a wild 98, and its earnings growth rate is good at 27, but isn't that impressive for that extremely high price to earnings. And you have to hope that it keeps growing. And it must be growing because it's being added to the S&P 500. So its earnings growth rate is good. Its price to earnings is too high, but that's something that can come down. And we have a bullish move in the market. But the main thing is it's being added to the S&P 500. So it's at least a good swing trade up until after September 23rd, and I'm just going to play with this one. You know, if its price to earnings comes down and it holds that earnings growth rate, I may keep it as the employee dilution with paying the employees off with stock, and you having your stock being diluted is probably less of a factor as it gets bigger, since they are selling more software to corporations. They're expanding their corporation side. They've always done a lot of government business. They were doing government business 10 years before they ever IPO'd, so that's hardly new to them. A stock I really like is Oracle Corporation, symbol ORCL. You can see that it's made almost 54% year to date. Its relative strength is 79, which is excellent. And you can see it's really jumped up there lately. It's in September, it's gone from 140 to 162. So I had to buy it, seeing it jump like that. And also, I know that they've bought as many Nvidia chips as they possibly could. So they must be benefiting strongly. Oracle is involved with cloud infrastructure. And I think the software side of artificial intelligence gains most from the Nvidia chips. And so Oracle is benefiting strongly from their investment in Nvidia. And their statistics look good. Their price to earnings is only 24, which is excellent for a technology company. And their earnings growth rate is 14%, which is okay, but I would expect that to take off somewhat more. Their investment in the Nvidia chips is just starting to take off because I know they poured a lot of money into that. This next stock is speculative. It's the New Scale Power Corporation, SMR. Think of that as small modular reactors, small modular nuclear reactors. It's your friendly neighborhood nuclear plant, which artificial intelligence companies are looking into. Larry Ellison, the head of Oracle, was rumored to be looking into this sort of thing, as are other artificial intelligence companies, to provide energy, because so much energy is needed by these artificial intelligence companies. And since the beginning of the year, it's made 194%. But you can see it really shot up when artificial intelligence was very hot, and it hit over 15. And right now, it's at $9. I managed to get it around $8. So I'm hoping for a return to where it has been. I like the idea that they're doing clean energy, and it should be safer because it's a smaller situation. So that's the way I roll. I think we got encouraging CPI and PPI data, and the jobs data is encouraging. Unemployment is only 4.2%, which is still decent. So I think the Fed is convinced that inflation at least seems to be coming down, and they're more afraid of going into deflation right now than they are afraid of inflation. There's about a 50% chance that they might do a 0.5 interest rate cut, which would be awesome. I think whether they do 0.25 or 0.5, I don't think it matters. I think as long as we're not going into a recession, it's bullish for the stock market. And the Atlanta Fed is saying that the gross domestic product, the GDP, is 2.5%. So we do not appear to be going into a recession anytime soon. And so I think the Fed is starting to play with the idea that maybe they will do 0.5. They will do at least 0.25 for sure. Either one of these is bullish the way it's turning out. Thanks for listening and watching.